Welcome everyone. In this video, I want to answer a question that I get a lot from newer traders who are aspiring to be professional traders or to be able to trade for a living. And the question is, how much money do I need to trade options for a living? And it's kind of a tough question because obviously everybody's lifestyle is a little bit differently. What I need to live on or what I want to live on might be a lot different than what you need or what you want to live on. So it's kind of a tough question to answer. However, I did want to provide some value here to show you a way to help calculate and project what you might need to be able to make a certain amount of income. So let's jump in. First off, there are three key variables that we want to take a look at. One is theta. That's the daily time decay that you get from the strategies that we teach of selling different types of option premium. Number two, what's your profit and loss targets, right? That comes into play to help you calculate what your income is going to be on a monthly or annual basis. And then three, the winning percentage of the strategies that you trade. Okay, so let's go to the first one, theta. So what is theta? We've talked about this in courses and other lessons, but just to recap, theta is one of the four primary option Greeks. It's a theoretical value that refers to the decay of an option as time passes. Okay. Another way to think of that is theta is your daily paycheck. It's the kind of the theoretical amount that you should make if price and volatility and all factors stay exactly the same. That's what you should collect on that time decay in your specific position. Two, profit and loss targets. So we're going to focus really on four core strategies that we trade a lot here at Navigation Trading. First being a strangle, and 50% of max profit is our target for that strategy. Second, iron condors, we target 40% of max profit, butterflies 20% of max profit, and straddles 25% of max profit. And that's what we've found in our research and experience is the best bang for your buck is to manage those winners at that percentage max profit, book those profits, and redeploy that capital into new high probability opportunities. And third, the third key variable is the winning percentage. So if you manage your winners the way that we teach, over time what you'll see is strangles will have about a 90% chance of success, iron condors about 85%, butterflies about 75%, and straddles about an 80% winning percentage. Okay, so those are the factors that we're looking at in trying to calculate and project what our potential income could be from these trading strategies. Okay, and then what I did is I put together a sample portfolio that you might carry. And so what I'm looking at is I did 3 iron condors. I did an iron condor in SPY, IWM, and TLT. I did strangles in natural gas, bonds, oil, and gold futures. I did butterflies in Netflix and Amazon. I did a straddle in EWZ, and I did a straddle in soybeans. Okay, no real strategy or rhyme or reason here. It's a diversified portfolio with uncorrelated underlyings. And I tried to keep the margin requirement right around 9,000. So on some of you can't get it exact. So some of these it's going to be a little over, some it'll be a little under, but that'll give you kind of your baseline, giving you a total capital of just under $100,000 for this example. And then I went to the platform and I looked at each one of these and I said, okay, what's the theta? What's the daily income amount that I should expect from trading that particular symbol and that particular strategy? And remember, we always enter these trades when there's about 30 to 60 days to expiration. Obviously, you're going to collect more credit. The further out in time you are, less credit. The closer to expiration you are. But this will give you a good idea. In the day that I did this, there was 43 days till expiration. Okay, just to give you an idea. So right in that 45 day, right in between that 30 and 60 day range, which is optimal. And then what I did is I simply took that daily theta number and I multiplied it by 30, assuming 30 days in a month on average. And so that's where I got the monthly theta amount. So if you total those up, and before I do that, let's go to the platform just to take a look, like at the oil strangle, for example. To find that theta, you're simply going to put in your strategy. So in this case, to get to about $9,000 of buying capital. So like if you hit confirm and send, you can see that's $8,600 is what the initial margin would be to put this trade on. Okay, so that's where I'm coming up with that. That's why I've got 6 contracts here. And then what you can do is you can move this hash mark to exactly where price is, and that's going to give you your theta. So in this case, 180. On the slide, so at the time I did this on the CL strangle, it was 183. So right in there, right? The markets are open, markets moving around, so it's not going to be exact, but this is just to give you kind of a back of the envelope theoretical value to help you project potential income. Okay. Same thing if we go to another example like the TLT Iron Condor, 30 contracts to get to that 9,000. So if we hover, let's see, confirm and send, it's right at 7,000, so a little bit under. The theta was 39 on the sheet. It was 39, yeah. So took a little bit less capital. Again, some of these are a little bit over 9,000, some are under, but that theta number is what we're focusing on. So about $39 in theta. So I just wanted to give you an idea of where you get those numbers. And keep in mind, watch the theta number as price moves around. Okay, that's going to fluctuate as well. It's going to go up and down, up and down. And then depending on what volatility does, that's going to fluctuate as well. So that's not a static number, okay? It's a theoretical number based on where price is today and where volatility is today. And then that's obviously going to change. If we move this through time, watch the theta number as well. And that theta number is going to increase. So this initial theta number is today specifically. And as you get closer and closer to expiration, that theta number each day theoretically is going to grow based on price and volatility staying unchanged. Okay, so that's how the theta component works, and that's how you can help project. So I've got the daily theta, multiplied that times 30 to get the monthly theta numbers. So if we add all this up and assume this is our portfolio, our monthly theta amount is $27,450 a month. Okay, that's the monthly theta. Now, not every trade is going to be a winner, right? And we're taking these trades off at a percent of max profit, and we're redeploying that capital. But this will help give you an idea, because what you'll find over time is that a realistic expectation is to keep 25 to 30% of that theta each month on average. Okay? So conservatively, if I take 25% of 27,450, based on these assumptions, based on this example, you could assume to make about $6,862.50, which is 25% of that number there. Okay, so $6,862.50 times 12 months, and you're looking at $82,350 a year. Okay. So again, just an example, you've got to do this kind of theoretical projection based on your portfolio size, based on the amount of theta that you have going on at any given time. So if you look at your overall, if you look at your account and you look at and you total up your total daily theta, then you can get an idea projected out, multiply that times 30, and that'll give you an idea of what your monthly theta is. And then based on winning percentages and managing trades, you can get an idea that about 25 to 30% of that is what you'll actually keep. Okay? So I hope that was helpful. I'm trying to be as realistic as possible because there's so much hype out there about how much money you can make trading options, and I'm all about giving you guys real value, real life, situational expectations to help you become the best traders possible. And if your dream is to become a professional trader, hopefully this helps in getting you to that place where you want to be. Thanks, and we'll see you at the next video. If you'd like to learn more about the different strategies that we use to make consistent returns, come see us at NavigationTrading.com. We've got a ton of free resources, including the Navigation Watch List, which is a list of the most profitable symbols to trade for each type of strategy. We've got the Volatility Indicator, which you've seen on my charts. You can download this directly to your thinkorswim trading platform. And we've got a free options course called Trading Options for Income, which is a step-by-step guide to get you making consistent trades right away. We look forward to seeing you there.